The allure of the American market, a first look. The US stock market is a place where everyday people can own a piece of American companies. Think about the coffee you drank this morning or the phone you're holding. Chances are the companies that make these things are listed on the stock market. It's a bustling marketplace where fortunes can be made and sometimes lost. Understanding it isn't rocket science. It's about seeing what companies are doing well and thinking about future needs. The US market is known for its dynamism and innovation. It's home to tech giants and healthcare pioneers. This innovation is why many believe in its long-term prospects. The journey of the US stock market is one of incredible expansion. It started small and is now a global powerhouse. As America grew, so did its companies and stock market. There have been highs and lows, but the trend is upward. This resilience shows the adaptability of American businesses. If you have a retirement account like a 401k, you're likely already an investor. Understanding the market can help you make better financial decisions. It's about understanding the companies you're investing in and having a long-term perspective. The market is a powerful tool for wealth creation. It's about finding good companies, understanding their stories, and sticking with them. That's the core idea, plain and simple. Riding the market roller coaster, understanding ups and downs. The stock market doesn't just go up in a straight line. These movements, the rises and falls, are what we call volatility. Think of it like the weather. Sometimes it's sunny, other times it's stormy. Economic growth, investor confidence, and interest rates are key drivers. Bad news can send stocks tumbling, like economic shocks or overvaluation. Geopolitical events and policy changes can also create ripples. Understanding these basic drivers helps demystify why the market moves the way it does. It's not random. There are usually underlying reasons for the market's mood swings. Stars and stumbles, identifying market winners and losers. Some companies take center stage, delivering stellar performances, while others might fade. Recently, tech giants like Nvidia and Meta have been stars, driven by AI advancements. However, small-cap stocks in certain sectors like banking faced challenges. Over the long term, the S&P 500 has shown strong growth, with tech leading the way. Companies like Apple and Microsoft have created enormous wealth for patient investors. Not all giants maintain dominance. Some face challenges from competition. The market is dynamic. Leadership can change. The trick is to find the future stars, not yesterday's heroes. Economic headwinds, inflation, devaluation, and currency surprises. The stock market is deeply connected to the broader economy. Inflation, currency value, and sudden shocks can shake things up. High inflation can lead to higher interest rates, affecting company growth. Some sectors like oil and gold can do well during inflationary times. A strong dollar can hurt US companies selling overseas, but benefit foreign investors. Currency shocks like trade wars create uncertainty and volatility. Proposed tariffs can weaken the dollar, affecting export-driven companies. Overall instability isn't good for the market. It's like navigating a ship in a storm. Everything becomes harder to predict. Investors tend to get nervous, leading to selling pressure. Understanding these factors helps in navigating the market. It's about being prepared for economic headwinds. Section 5. Who's in the game? American investors and global capital. Many ordinary Americans are involved in the US stock market. In 2024, about 65% of adults in the US had some money invested in stocks. This is primarily through retirement accounts like 401(k)s and IRAs. Stocks have historically been a good way to grow money over time. However, the wealthiest 10% of households own the majority of stocks. The US stock market is a global magnet for capital. Investors from all over the world are drawn to the US markets. The US market is large, liquid, and home to leading technology companies. Countries like China, Japan, and the UK are major investors. Foreign investment helps fund American companies. This influx of foreign capital comes in various forms. Private equity firms and foreign funds actively invest in US stocks. Global economic and political currents influence where money goes. The US market is part of a larger, interconnected financial world. Understanding these dynamics helps in navigating the market. It's about recognizing the global influence on the US market. The market's performance affects many, but gains benefit those with significant wealth. It's a complex but integral part of personal finance. Section 6. Peering into tomorrow, the US market towards 2050. Predicting the future of the stock market is tricky, but we can look at trends. Advancements in AI could be a major driver of growth for US companies. Investments in clean energy are set to create new industries and opportunities. The US market's size and liquidity will likely continue to attract global investors. However, tariffs and overvaluation could cause volatility. Government debt might limit economic intervention if needed. Looking towards 2040, the US market's strength lies in innovation and adaptability. American companies have a knack for reinventing themselves. Global investors trust the US market's regulatory framework. Challenges like an overvalued dollar and climate change could loom larger by 2050. Geopolitical risks and an aging population might also impact the market. Adaptability will be key to navigating these challenges. The U.S. market's future depends on maintaining leadership in key fields. It's about being prepared for long-term growth and challenges. Section 7. America's market on the world stage and the presidential factor. U.S. markets have generally outperformed global stock market indexes. The dynamism and innovation of U.S. companies contribute to this success. U.S. stocks often trade at higher valuations, meaning more risk if things go wrong. Many investors pay a premium for the perceived stability of the U.S. market. Presidential policies can impact the market, but many factors are at play. The market saw gains during Clinton, Trump, and Biden's presidencies. However, challenges like the dot-com bust and financial crises also occurred. Recent tariff announcements caused market jitters. The lesson is that while presidents can influence, broader forces are at play. It's about understanding the global and economic factors affecting the market. The U.S. market's performance is influenced by a complex set of forces. It's rarely just one person calling the shots. Understanding these dynamics helps in navigating the market. Section 8. Your investment playbook, strategies for success. For short-term investors, focus on companies with strong fundamentals. Avoid chasing trends. Solid performance matters. For long-term investors, patience and diversification are key. Invest regularly in a diversified portfolio for retirement. The power of compounding can create significant wealth over time. Diversification helps cushion against market volatility. Start early, invest regularly, and resist panic selling. It's about planting a tree. It takes time to grow, but the rewards are substantial.